So in 2017, the head of the world's largest money manager called Bitcoin, quote, an index of money laundering. That same day, the boss of America's biggest bank called the people buying it stupid. Today, those exact two firms, BlackRock and JP Morgan, run the biggest blockchain projects on Wall Street. Right now, there's about $34 billion of real-world assets, Treasury bills, money market funds, private credit, living on blockchains, not meme coins, the safest, most boring assets in finance. So let's walk through how tokenization went from a quiet experiment in 2018 to the thing every major bank on earth is racing to build. So look, before tokenization was a Wall Street buzzword, it was a quiet experiment almost nobody noticed. Back in August 2018, the World Bank issued a bond called Bond I, and the name's a little pun on Sydney's Bondi Beach. It was the first bond ever created, sold, and managed, start to finish, on a blockchain. 110 million Australian dollars, arranged by the Commonwealth Bank of Australia. The World Bank's own treasurer called it a pioneer deal that was, quote, extremely well received by investors. Then in 2019, France's Société Générale went bolder. They issued a €100 million bond as a token on the public Ethereum blockchain, and they bought the whole thing themselves. A 200-year-old bank testing blockchain on its own balance sheet. Someone even tokenized the St. Regis Hotel in Aspen and sold $18 million of it. And then, mostly silence. For a few years, this lived in the background, while DeFi quietly proved programmable money actually works, until March 2024, when BlackRock, the biggest asset manager on the planet, launched a tokenized fund called BUIDL on Ethereum. That was the moment this stopped being a pilot. And today, if you pull up the tracker at rwa.xyz, there's about $34 billion of real assets on blockchains. The idea is old. The Wall Street stampede. That's brand new. Okay, so let's talk about the people driving this. Because Larry Fink's story alone is wild. In 2017, he said, quote, Bitcoin just shows you how much demand for money laundering there is in the world. That's all it is. Now jump to 2022, at the New York Times Dealbook Conference. Fink says the next generation for markets and securities will be tokenization. And by his 2025 letter to investors, he's all in. He writes, quote, every stock, every bond, every fund, every asset can be tokenized. And then my favorite line, if Swift is the postal service, tokenization is email itself. The guy who called it money laundering now compares it to inventing email. And he's not alone. At JP Morgan, the blockchain unit now called Kinexys has processed over $1.5 trillion and moves more than $2 billion a day. Franklin Templeton built a money market fund where the blockchain itself is the official record of ownership. One share equals one token, and you can send it peer-to-peer. And then there's the DTCC, the quiet giant that settles around $3.7 quadrillion a year for Wall Street. Most people have never heard of them, and they quietly bought a tokenization company in 2023. So why now? Two reasons. The rules finally got clearer. The US passed its first stablecoin law in 2025, and tokenization fixes something banks have always hated, waiting days for trades to settle. So how do you actually put a treasury bill on a blockchain? It's simpler than it sounds. At the center of it all is a smart contract. Think of it as a vending machine for finance. Put the right thing in, the right thing comes out automatically. And once it's running, nobody can change the rules. Now, a normal token, the ERC20 standard, is basically digital cash. Whoever holds it can send it to anyone, but you can't hand a regulated bond to just anybody. So there's a standard called Before any transfer goes through, the token checks the receiving wallet against an approved list. Not on the list? The transfer just doesn't happen. Quick, honest detail, because precision matters. BlackRock's BUIDL doesn't use that exact standard. It's a regular ERC20 with a whitelist bolted on. Same result, different plumbing. And where do they live? Most run on public Ethereum, secured since 2022 by proof of stake. Validators put up their own money and lose it if they cheat. But banks that need privacy use networks like Canton, where each party only sees their slice of a deal, like a shared ledger where everyone has a privacy curtain. And here's the real magic: atomic settlement. Today, buying a bond is like mailing a check and trusting the other guy mails the bond back days later. Atomic settlement is a handshake where both hands move at once. You get the asset the instant the seller gets the cash, or neither of you moves at all. Days of waiting, gone. So now, the honest part. Because tokenization isn't finished, and anyone telling you it's a done deal is selling something. The biggest issue? Most of these tokenized assets are stuck in walled gardens. Different banks built different blockchains, and a lot of them don't talk to each other. The global securities regulator, IOSCO, said it plainly in a late 2025 report. The key challenge is the lack of interoperability across blockchains, and they admitted, easy secondary trading, quote, appears not to be fully achieved for now. And there's a deeper question. If you hold the token, do you legally own the asset underneath it? When the blockchain record and the old paperwork disagree, which one wins? An executive at Euroclear put it perfectly. Without coordinated action, the same silos tokenization is trying to eliminate could just reappear in digital form. But here's why I'm optimistic. Look at who's fixing it. Chainlink built a system connecting 60-plus blockchains. Swift, the network behind 11,000 banks, is building a live blockchain ledger going into real transactions in 2026. The Bank for International Settlements has 7 central banks, including the New York Fed, on a shared ledger called Project Agorá. And Singapore runs Project Guardian with 40-plus institutions. So yeah, it's mid-construction. But the construction crew is basically the entire global financial system working in the open. That's not a crisis, that's coordination. So where's all this going? 3 things, already starting. First, instant collateral. Back in 2023, JP Morgan and BlackRock tokenized shares of a BlackRock fund and pledged them as collateral to Barclays Bank. And it settled in minutes instead of days. Think about that. Your money can keep earning interest while you're also using it as a deposit for another trade, and it can move on a weekend. By 2025, that same fund was accepted as collateral on crypto exchanges like Deribit. Second, markets that never close. US stock trades still take a day to settle, so the DTCC, with sign-off from the SEC, is tokenizing US Treasuries on the Canton Network to push toward instant settlement around the clock. Third, and this is the wild one, AI agents. BlackRock's digital assets chief, Robbie Mitchnick, said this year that AI agents are very unlikely to use old systems like Fedwire and Swift. His point? Crypto is computer-native money, AI is computer-native intelligence, and they fit together. And it's not just talk. Coinbase switched on an old, dormant piece of the internet, the 402 payment required code that sat unused for 30 years. So AI agents can pay each other in stablecoins automatically. Visa and MasterCard launched their own versions last year. Now, to be fair, how big does this get? The experts wildly disagree. McKinsey says maybe $2 trillion by 2030. Boston Consulting Group says almost $19 trillion by 2033. And that gap isn't about the technology. It's a bookkeeping choice about what you count. So the honest takeaway isn't a number. It's the direction. And the direction is clear. So let's pull it together. Tokenization isn't really about crypto. It's Wall Street quietly rebuilding its own plumbing, taking the safest, most boring assets in the world and putting them on rails that settle in seconds and never close. The same people who once called this a scam are now building it as fast as they can. About $34 billion on chain today, with forecasts running into the trillions. It's not finished. The walls between systems still need connecting. But the entire global financial establishment is in the room, building it together. And honestly, that's what makes it one of the most fascinating shifts in finance right now. So if this finally made tokenization click for you, do me a favor and hit subscribe. It really helps the channel. Drop a comment and tell me which part surprised you most, and I'll see you in the next one.